Nigeria wants to more than double its GDP to $1 trillion by 2030. And the new government has embarked on a series of economic policy reform to increase foreign capital inflows. However, the recent episode of multinational divestment from Nigeria is generating a lot of concern. So for you, in your opinion, and considering its recent economic history, what should policymakers prioritize, in particular in the case of Nigeria? And the floor is yours.
Anne. Thank you very much, Anne. And congratulations to you and Lades and the EMI team. So to your question, given the current state of the global economy, multinational divestment is really a global issue. It's not peculiar to Nigeria. But to put things into perspective, it's very important to understand why foreign companies divest. FDI relocation happens when the objective behind a firm's decision to go global has not been realized. Across many countries, the retreat from globalization and a resurgence of industrial policy, along with the growing dominance of inward-looking policies and geo-economic fragmentation, are key drivers. In the Nigerian case, what you have seen so far is caused by a confluence of factors, including the foreign exchange crisis, high cost of raw materials, insecurity, corruption, and the huge infrastructure deficit, which have driven up the cost of doing business significantly. Also, Nigeria's growth and competitiveness challenges cannot be fully understood without looking at its political economy. Okay. So quickly, after inauguration last year, the Policy Advisory Council of the current government unveiled a proposal to grow Nigeria's economy from about $450 billion to $1 trillion by 2030. You would think that more than doubling GDP in about 7 years sounds quite ambitious, given the current state of the economy. But this is not completely impossible. So that sort of sets the context. But in terms of recommendations and way forward, what really should the government do? Given its recent history of economic stagnation and underperformance, I put forward 4 key proposals. And of course, I should quickly mention that these are not collectively exhaustive. The first proposal is fiscal incentives. Policymakers in Nigeria must look at the issue of fiscal incentives critically. Countries, especially those with fiscal challenges, cannot afford to dish out subsidies to domestic and foreign investors indiscriminately, all in the name of fiscal incentives. Nigeria has double taxation agreements already, about 14 of those, which are ratified, and bilateral investment treaties with 31 countries. So policymakers must ensure that the marginal impacts of fiscal incentives are maximized. The second recommendation is value maximization after divestment. Look, as much as foreign divestment is generally not considered a positive development, some experts would argue that as long as multinational exits enhance the activities of indigenous firms and help them to achieve productivity growth, maybe the net outcome may be beneficial. So, in my opinion, since current divestment plans by some of these multinationals still require government approval, I think the authorities in Nigeria should focus not only on the commercial dimensions, but also on the environmental and social aspects across all asset classes. Thirdly, strategic integration into global value chains will be very important. With the return of industrial policy, being strategic about increased integration and participation in global value chain is very critical. And this requires not only openness to trade and investment, but the willingness to facilitate transparent and predictable investment policies. Nigerian diplomatic missions and other permanent representations abroad must leverage these diplomatic assets to support the pursuit of commercial success in industrial sectors where Nigeria has market power. And last but not least is the differential economic performance at the subnational level. The country needs to leverage that. They have 36 states. To ensure the various regions maximize their endowments, economic incentives must become the major driver of fiscal decentralization to harness the innovation economy for increased competitiveness. Nigeria does need a revamped and a fit-for-purpose governance model that explains the differential economic performance of its subnational regions. So, in conclusion, the country needs deep and long-term reforms to build confidence and foster sustainable and growth-friendly fiscal policies. And policymakers must leverage the digital revolution to create value in emerging sectors with high growth opportunities, build strong domestic institutions, and ensure the benefits of economic growth are broadly shared. So I'll leave it at that, and I'll pass it on to Anne. I'll be more than happy to take questions afterwards. Thank you very much.